Hello, Paul Gerard from Price Accounting Services, and welcome back to this further video in our SMSF series. And this video deals with, so how much do I need to have a self-managed super fund? Good question. Unfortunately, I can't give you an answer. It's very subjective, but the things that are generally considered when the likes of ASIC or the ATO are asked this question will revolve around the scale and amount of the member funds in the fund. Okay, what do I mean by that? So if you've got $100,000 as a couple, I'm going to say quite categorically right now, it is insufficient for a self-managed super fund. Why did I say that? I said it because I know that the costs of running a fund at that level are going to be pretty similar to whether it's $500,000 or more in the fund. And so if we said the minimum cost for that fund by the time you add in all costs, etc., might be $2,500. Okay, $2,500 a proportion of $100,000 is a very high cost. Now, you also lack the ability to truly diversify at that level because you do need to have some liquidity, some cash, and cash returns at the present time are appalling. Very trivial, if any rate at all is earned. So commonly your transactional account won't earn anything, or perhaps it might earn 0.01%. So, and term deposits, etc., pay very little. Okay. So you then need to diversify into other types of investments. So the risks start to get a bit heavy when you've got a limited amount, because you might be looking to invest, for example, even $10,000 or $20,000 amounts into certain investments. You don't get many investments for $100,000. Then you also got to maintain the costs of running the fund, etc. However, that's one specific view. There's also another view that says, well, I've got control and I believe I might have a better way to utilise that $100,000 and to invest it in a way that will produce better returns. Now, remember, you're trying to beat the professionals here. The funds employ people who get paid millions of dollars a year, not individually, but overall, they pay people millions a year to professionally manage investments for the members. Not only to get good rates of return, but to limit losses, to hedge, to cushion risk, and so forth. A lot of strategy goes in. You're not going to have that with a self-managed super fund. Okay. Then you've got issues surrounding life insurances, which you might lose and be unable to afford in your self-managed super fund. So a self-managed super fund commonly might start to be a very worthwhile consideration when we've got a matter of maybe a couple $100,000. Now, at that level, even if you're looking at utilising a loan to buy a property, and we'll cover that in another video, the scale is starting to get to a point where there's sufficient liquidity to cover the liquidity buffer you need, and also ensure that the fund isn't going to have such a high debt or leverage that it's consuming its contributions to pay the loan. So there's a whole bunch of stuff that needs to be considered when it comes to the scale. So I often speak to people who say, well, between my wife and myself, we've got 100, 120,000 or whatever. It's very rare and very unlikely that's going to be a sufficient scale. Another couple might come and say, well, we've got 200,000, we're in high paid income jobs, we've recognised we should be contributing more to super, and there's a better strategy for accumulating more quickly. That might make sense for somebody. So I guess what we're saying is we can't put anybody into a little box and say, here's the one answer. Now, one of our associated companies, Price Financial Intelligence, has a financial services license, AFSL, and they have financial advisors who can consider those circumstances and perhaps give you financial advice if you're looking for that. But in many cases, it's an unnecessary cost when sometimes the bleeding obvious might jump out at you. So we're happy to consider your views and tell you what we think and guide you and steer you so that you make the right choice. We certainly don't want to peddle or be forming self-managed super funds that are inappropriate for people. You know, for example, a single old person who's 72. There's so many risks I couldn't tell you. So we wouldn't be suggesting something like that. But there could be strategies for a generational situation where maybe that person, together with maybe one or two adult children, could find there's good succession planning for a strategy. So loads to consider. So I hope that sort of doesn't give you a great answer, but I hope it sort of gives you an idea on some of the ideas we have when somebody asks, so how much do I need to have a self-managed super fund? Okay, so if you have any questions, we welcome a call. So we'll speak then, or look forward to seeing you when we present another video in this channel on self-managed super funds. Cheers.